One of the characteristics of bearish market is that all stocks move together along with the index. And in a bull market, there's a difference. In bull market, what tends to happen is individual stocks move independent of the market indexes, or some stocks will move differently from the indexes. And this you can see very clearly if you look at like basically action, even on a daily chart, or if you look at an action on an intraday basis. And understanding that everything is moving together can help you a lot, because you can use the signal generated from market to time a trade on another stock, and that can help you a lot because everything moves in tandem. Now if you look at here, if you look at SPY, you will see that in this particular case, the market moved here up yesterday, or on Friday it moved up. And if you look at Amazon, right, you can see that the chart will look similar. But this is more useful information if you are trading on a lower time frame, because on lower time frame this can be very useful. And this will be true of any chart if you look at it basically most of the time, especially if they are index component, they'll all be looking very similar kind of a thing. But the advantage of understanding this and understanding the unique nature of the bearish market is that when you basically get into intraday kind of a trade, you can generate a signal from the indexes to trade individual stocks. So if you look at, say here, if you look at these are like basically this is an intraday chart on a 5-minute of TQQ, TNA, DIA, and SPY. And if you see here, SPY started making a move, right? And SPY started making a move, and you see that all the indexes have the same time, they all went together, right? Now, but these are indexes, they obviously move together. But when you look at a stock and see this action, like say this is the same thing, SPY is going up, and you have Amazon, United Health, and Visa, right? And if you look at them and see when SPY started going up, SPY started going up, and all of these stocks also had a breakout on them. You can see, if you see the line which I have like the crosshair, you'll see each of them broke out at the same time. So the advantage of understanding this kind of a thing is that what you can do is you can use the index to generate a signal for an individual stocks. And this is exactly what I did on Friday. I wanted to basically trade Amazon because Amazon is a high price stocks. So when Amazon makes a move, you can make $50-$60 on a move, right? So that's why I wanted to trade Amazon, but focusing on the individual stock wasn't really helpful, because what you're going to have is a lot of the index is moving, the stock moves. So in order to generate the signal, what I did was like basically I was watching this, and when the SPY had a breakout, right, I timed the entry on Amazon along with that, and then like the stock went up around $63 basically, right? So this is very important to understand, and this kind of a behavior only happens in a bearish market where everything moves in tandem and everything goes down in tandem. As a result, if you are in an individual short, or even if you're taking a swing trade, and if the indexes start going up, that stock is going to go up, even though it might be weak stock. So as a result of this, your stock can get hit. So understanding this unique characteristics of bearish market can help you make money, because if you can time the entries on a stock, individual stocks, with the by generating a signal from a index, you will find that it is much easier rather than focusing on an individual stock. So again, similar thing like let's say here, and based on that, if you could have traded United Health, you could have traded Visa, and all of them will look same. All of them will look same, and at the same time they had a breakout. And every time, like, and I say here, you can see that the charts look like almost mirror images of each other. So this advantage is there if you understand how markets operate in a bearish market. Initially, when I was starting out, I had no understanding of how to trade in bearish market. But now that I've seen many corrections in the market and studied the phases or how this operates, and especially in a bearish market, you will see that there's tremendous amount of correlationship between individual stocks and indexes. In other words, simple word, it just means that everything moves up or everything moves down with the index. So if you pay attention to the index, you can generate a signal to trade an individual stock. This doesn't really work the same way in the bullish market. In the bullish market, what is going to happen is the indexes might be down, but that day the stocks might be up, some other stocks might be going up. So there's a lot of dispersion in a bullish market. So something to think about, and something which you'll notice only in a bearish market. And next time, again, when there is a correction, you can keep this in mind to generate signals and make money.